trillions of dollars. Not millions, not billions, but trillions. That's how much money is needed for investing in the clean energy solutions that we need in order to halve emissions by 2030, and also to limit global warming to as close as possible to 1.5 degrees Celsius. All financial flows will need to shift towards activities that help solve the climate crisis. Public and private finance. That's what Article 2.1c of the Paris Agreement says. We're talking systems transformation here. We want to shine a light today on the roles that companies can play in triggering this transformation. We'll hear from companies in just a little while and from a bank too. But first we go to Andrea Lindblom from the Exponential Roadmap Initiative at COP28 in Dubai. So Andrea, why do we shine a light on the role of companies? Please tell us.
Well, the short answer is that we're doing that because companies can play a role and because we have to pull all the stops, right, to shift finance towards where it needs to go, away from fossil fuels and towards low emission activities and climate solutions. And the longer answer is that the Exponential Roadmap Initiative, we work with companies, right? We unite innovators, transformers, disruptors that take action in line with 1.5 degrees. And the framework that we use here, that is our 1.5 degree business playbook and the 4-pillar climate strategy that we show here in a slide. So that's pillar 1, reduce own emissions. Pillar 2, reduce value chain emissions. Pillar 3, provide and scale climate solutions. And pillar 4, accelerate climate action in society. And when we now look a little bit closer at pillar 2 in more detail in this next slide, we recommend that companies evaluate and take action to reduce the footprint of their financial supply chain. And the idea here is that companies have a financial supply chain that is actually quite similar to their material supply chain, as this illustration now shows. So companies generate cash, they deposit that cash in the bank, and it becomes part of the assets that the bank uses to support activities. And these activities can be either green, they can be low emission, or they can be high emission and at worst go into fossil fuel expansion. So through their cash deposits, companies may actually indirectly be financing really high emission activities. And as this slide now shows, if the companies were to report these indirectly financed emissions, their total reported greenhouse gas emissions could be much, much higher than what companies are currently reporting. And the Carbon Bankroll report that was launched last year from Topo and Bank Forward and others that revealed exactly that. Most companies' actual total reported greenhouse gas emissions would increase significantly if emissions from corporate cash holdings in the bank were counted. And that's simply not great for a company that's sincere in its efforts to reduce emissions. So we at the Exponential Roadmap Initiative, we teamed up with Topo and Bank Forward and also with Fair Finance Guide Sweden to produce this very practical little guide here, an action guide, the Greening Cash Action Guide. And that lays out 7 concrete actions that companies can take to reduce the emissions from their cash deposits in the bank. And these actions involve gathering data, they involve engaging with banks, talking to their banks, and potentially also shifting money to more climate-friendly banks. And the bigger thinking is now illustrated in this graphic that we show here, that when companies signal to banks that they need to reduce the carbon intensity of their loan and investment portfolios, that can lead to banks then rethinking what they're doing in terms of fossil fuel financing, et cetera, and putting stricter requirements in turn on the companies that they lend money to and invest in. And those stricter requirements can be transition plans and net zero policies. So that would trigger what we call here the virtuous cycle that would support and accelerate the transformation of the financial system. And that's why I'm very, very excited that you, Katarina, are now going to be talking to 2 chief financial officers from member companies in the Exponential Roadmap Initiative about the role that companies can play in triggering financial system transformation. Over to you, Katarina.
Well, thank you very much, Andrea, for explaining why the Exponential Roadmap Initiative is looking to its members and companies to leverage their influence over banks to really trigger the financial systems transformation. So joining me here on the stage here in the studio in Stockholm are 2, as Andrea said, 2 chief financial officers at the Exponential Roadmap Initiative. Members are you, you're that also, Icebug and Ericsson. So welcome James Varkey from Icebug and Carl Melander from Ericsson. Wonderful to have both of you here. So let's start with you, James. Icebug, a fantastic brand that makes fantastic shoes. You're wearing them. I'm sorry, I'm not wearing mine. But so Icebug, how do you work to reduce the emissions from your supply chains?
So even getting a figure has been pretty difficult. So this is the first year that we'll be reporting financial emissions. So it's been difficult, I would say. We started this journey maybe 5-6 years ago, starting to talk to the banks about their emissions and how do they work with reducing emissions, setting targets. And something we specifically wanted them to do was, stop funding new fossil extraction. So it's been a long journey, and finally now at least we have somewhat of a figures that we'll report.
Thank you, James. And how about Ericsson? Carl?
Yeah, I think for us the most important thing we can do here to influence the financial supply chain is to cater for our own house. So we issued, for example, last week a green bond. It was really well received, actually. It's a 500 million euro green bond. Yeah, we engaged a lot with the credit investors to drum up the interest, and I personally went to 11 meetings, maybe met 50-60 investors there. Great dialogue on how we will use the proceeds, the money, which is really about boosting our R&D, our research and development efforts in more energy efficient products, the mobile network equipment that we sell to our customers. And in the end, it was more than 3 times oversubscribed, this green bond. So I think we are really starting to get traction. That's one of the ways that we try to influence and have that dialogue with the financial partners.
That's very inspiring to hear that it was 3 times oversigned.
Yeah.
Indeed, that shows us something, right? Tells us something. Mm.
It does. I mean, there's big interest, and I mean we can also come into the challenges. This is an ongoing dialogue all the time with the financial institutions, and as was just said here, I think we are both trying to influence each other from the corporate side and from the banking side and so on to work more diligently toward a better, greener future for the planet. But I think we both play a role here in sort of sparring each other to.
For sure.
Indeed.
Isn't it? Yeah.
So let's move on and touch a bit upon the challenges. So James, from the Icebug perspective, what challenges have you faced in trying to get this moving?
There have been many. As a pretty small company, we can't voting with our feet is not really. Doesn't matter for them really. So what we've chosen is really the path of dialogue. So we've just had a lot of discussions with them and trying to move this forward. But it's hard to see a lot of measurable results. What we've seen is that they've been interested, right? So they've invited us to speak at seminars for their customers and. Also things like educating their employees. These have been good things, but it's been a journey. Really, from the first times we started talking about this, they were completely unaware. This was questions that had never been raised before about the banks, what their role was in the climate transition. So it's been a lot of challenges, I would say, but also encouraging things along the way.
Sounds like you basically need to educate the system a bit?
That was our perspective, at least. And maybe that's because we work with the SME advisors. Maybe for the large corporate clients, they are more in tune. I don't know. But from our perspective, at least, it's been a journey just to get them to a decent place. But they're moving forward quite quickly now.
Oh, good work.
Yeah.
How about the challenges you have encountered?
Yeah, to build on what James just said, I think we have a bit of similar challenge. I think of two things. One is that, and this is fascinating, I mean, Ericsson is a tech company, we love solving problems, and we think that digitalization, 5G can actually help the climate. And we are part of an industry in information communication technology that stands for 1.4% of global emissions, but can enable a 15% reduction of emissions. And now with 5G and AI and cloud, we think that goes up to 20%. That's a fascinating story we have. But that, on your point, there's an educational effort that needs to happen there for financial actors to see this, and also for regulators actually to see that digitalization of countries, of societies can have this very positive impact. So that's one of the challenges, I would say. The other one is more concrete. When I sit in investor meetings, I seldom get questions actually on our climate policies, our actions, what we do. Maybe it's taken for granted. Of course, the subject matter experts in, for example, in banks, they are very engaged. You have ESG departments and so on. But I would like to see more mainstreaming of this, that this would be part of the overall dialogue around financing topics in general, and also from the equity side. That's there we have a lot of steps to take still.
Yeah.
You need to ask them why they don't ask, huh?
Yes, exactly. It is important for us. It's really embedded in the business. Of course, I'm generalizing now because some of them are very much into this. I met, for example, the world's largest sovereign wealth fund a couple of weeks ago. And there was one message coming out of them, and that was, make sure you link your financial value creation objectives with the sustainability objectives. And I think, that's great. I couldn't have said it better myself, cool. Because that's when you get real traction, when you combine core business and financial value creation, and that with your sustainability objectives, then you get action and traction. So I love to hear that. That's really great.
So James, in terms of what levers to really pull to get this on rolling faster, what would those be from your perspective? So,
like I said, we've chosen the path of dialogue, and we've seen that we get some traction on that, right? So our objective is to get as many as possible to have this type of dialogue with their banks, right? Because only when it makes financial sense for the banks will we get a lot of movement here. So if a lot of us are interested in getting this kind of action from the bank, I think they will move much faster.
And you're here today, so people, more companies will know about this. So thank you.
Thank you.
From the Ericsson perspective, the most important levers here, what would those be?
I think we will continue to green our own financial activities, of course, just like we do in our core business, our technology development. We in finance, we have to be on the same or higher ambition level there, of course, to push green financing, to make sure that we place our cash in greener and greener ways. We're talking also in trade finance, for example, or the green bank accounts, that can be used and so on. So we try to push this everywhere. Again, on your point about dialogue, I think we can be stronger and better in a more systematic discussion with banks, with our core banks, for example, on sustainability policies and so on. So I think that's the next frontier to really lift this dialogue to a next level. And we will do that.
Excellent. Well, you're both trailblazers and educators, it sounds like you are too. So thank you so much for shining light on your work here. Thank you so much.
Thank you.
And now we'll hear from a bank that did change its climate policy, Danske Bank. The Financial Times recently said that this bank was a model student from an environmentalist point of view because of its new, unusually tough fossil fuel policy. So now we're going back to Dubai to Andrea Lindblom from Exponential Roadmap Initiative, and she has spoken to, she will be talking to Danske Bank.
Thank you, Katarina, and also really great to hear from two of our Exponential Roadmap Initiative member companies there, represented by their chief financial officers, on how they see the role of companies in triggering financial system transformation. I'm now really pleased to welcome here Samu Slotte, Global Head of Sustainable Finance at Danske Bank, a bank that has earned itself very positive media reporting for changing its climate policy and for quitting new fossil fuel financing. So, Samu, what allowed Danske Bank to change its climate policy despite full awareness that you're going to be losing business over it?
Yeah, thanks for having me here. So we did publish our new climate action policy in the beginning of the year. And we did set, first of all, we laid out what the current situation is in terms of our climate profile. And of course, large part of our climate footprint comes from our lending activities to our clients. And in that report, we also then set targets, 2030 targets for the most high emitting sectors, ranging from shipping and cement, steel, power generation, but also oil and gas. And I mean, our goal is, of course, not to get rid of clients. We want to support clients in their transition, provided they have sufficiently ambitious transition plans. And for most sectors, this is quite possible to actually draw the line on what is a sufficiently fast transition. But upstream oil and gas is particularly difficult. It's really difficult to tell when an oil company is transitioning fast enough. And we then set criteria for that, where we demand or expect our clients to have ambitious targets for their own decarbonization, but also their scope 3 emissions, so the oil and gas that they produce. And in addition to that, we also then said that we would not be financing oil and gas companies that expand into new oil and gas fields. So that's aligning with the IEA's net zero 2050.
But what enabled really that new policy?
And I'm just about to come to that. So there's two things really driving it. First one is that we have, of course, made commitments that we want to align our portfolios with the Paris Agreement. And that's one of the drivers. The other one is really financial risk. And it's not so much that we would be worried about the credit risk in these oil and gas companies. I mean, they are doing great and really striving economically. However, as a bank, we renew our loans to our companies roughly every 5 years. So there's a refinancing risk, because typically any company would have between 10 or 2 and tens of banks in their core banking facility. And if you as a bank want to exit, then somebody else needs to take your place. And if you don't find somebody to take your place, or if the company doesn't find anybody to take your place, then you're likely to have to continue with that. So there's a refinancing risk, and that's also one that we wanted to avoid and really choose our own point in time when we exit this sector.
Were there any other factors, pressure from civil society, pressure maybe including from your corporate customers to change your climate policy?
Well, we of course listen to all of our stakeholders. That ranges from our customers, both private to corporate customers, our shareholders, and of course there is a lively debate in the Nordic countries and in Denmark about the role of the financial institutions and how they should decarbonize. So of course we listen to all of these stakeholders, but I think the key drivers were really our commitment to the Paris Agreement through different initiatives, and then the refinancing risk, i.e. financial risk.
Now, this Greening Cash Action Guide that the Exponential Roadmap Initiative launched together with its partner Topo Bank Forward and Fair Finance Guide Sweden, that guide puts out the idea of a virtuous cycle set in motion by companies, by corporate customers to banks, putting requirements on their banks. Is that an idea that you can relate to?
Yes, I think it is important that our customers would require, or customers would require their bank to have a solid climate profile. However, it's not very common, I must say. There are quite few corporates that demand that. We also have institutional customers, and institutions like pension funds and the likes. They tend to be much more vocal about it than corporates. So I would actually welcome that corporates would also have a stricter requirement on their banks through the procurement of financial services and that, through that drive change. So absolutely, I can relate to it. However, then what should the parameter be in order to determine if a bank has a ambitious climate plan? In this proposal, it looks at financed emissions divided by the total assets. So carbon intensity.
Carbon intensity, yes.
Yeah, it's a good indicator, but it's a point-in-time indicator. So it looks only at what's happening right now, whereas you should also look at what's the direction of travel. How fast will that come down? Because clearly, if a bank has a profile that they finance high-emitting industries that also need financing for their transition, then the current emissions might actually be, the intensity might be quite high, but the trajectory needs to be fast enough. And that this indicator wouldn't capture, at least yet. So I think that would be a good addition to include it.
But that indicator would be in a bank's transition plan, isn't that right?
Yes. But the banks, so for instance, we have transition pathways for 8 different sectors. So getting that into just one number is a bit tricky. So it requires something a bit more analysis than just looking at the one indicator. The same way as any financial indicator from a company or a financial indicator or a financial institution. It's not enough to just look at the profit and loss line. You also need to look what actually is behind it. How was that number derived? So the idea is really good, and I think it's the right direction, but it needs a bit more analysis around it.
So if we look forward now, what would enable you as Danske Bank to take the next step and become even more ambitious in your climate policy? And what would that then look like?
Well, we're constantly reviewing our climate policies. So we now publish this climate action plan, which sets decarbonization targets for many of our sectors, and of course for our own operations. We will expand it to include also those sectors that we don't yet have there. There are still a number of high emitting sectors that we don't have in it. Car manufacturing, for instance, just as one example. So we will expand it. And of course, we will also seek to increase the ambition level in the target as we go forward. We have submitted our targets to the Science-Based Target Initiative for validation, and are working on getting that validated. And in due course, we will expand to other sectors also than what we have now.
And maybe we can come then to my last question. If you had to place a bet on one actor that could trigger the financial system transformation, who's that, and what do they need to do?
I'll answer it this way. What will drive, what's the biggest drive of financial institutions in changing will be financial metrics. So risks and opportunities, financial risks and opportunities. Those could transpire through different mechanisms, but the largest one of them will be policy. So for instance, at this COP, there's a lot of discussion about whether we should be, or nations should be phasing down or phasing out fossil fuels. And I think phasing out is an important signal because it sends a policy signal that this is what will happen. And with that, the financial markets then start to calculate in risks that, okay, so when will it happen? How fast will it happen? And what implications will it have for my portfolio? And how do I need to act? So I think policy signals are hugely important and will be the key drivers, in my opinion.
Thank you so much, Samu Slotte, Global Head of Sustainable Finance at Danske Bank. And with that, we'll go over again to Stockholm, Katarina, and our guest, James Varkey of Icebug and Carl Melander at Ericsson.
Well, thank you so much, Andrea. We heard now from Samu Slotte that corporations could be much more vocal in demanding more ambitious climate policies from their banks, but also that policy should send clearer signals, including by agreeing at COP28 to phase out fossil fuels, right? So when closing, I'm turning now back to my guests here. I will give you the same question that Andrea gave Slotte from Danske Bank. If you would place a bet on one actor that would trigger this to happen, the financial systems transformation, what would that be? Who would you place your bet on, James?
Yeah, like we talked about before, I think nothing really scales unless it makes financial sense. So I guess it'd still be two actors, right? So it'll be regulators and it'll be customers making demands. So that should be able to spark a lot of action, I think.
Thank you very much. And Mats?
Now, I agree with that. I think maybe three things actually that I think we can do and should do more. And the first one is really to use our power, whether big or small companies, as customers of the financial industry, to put demands and make sure we steer in a greener direction. Yeah. But secondly, I mean, we can also influence policy setting, regulations. Sustainability reporting is a huge topic. We can be in there and influence that so it really creates real action. And for us, I think, thirdly, you know, and I'm speaking for, of course, ourselves here in a way, but also for the world, that to advocate more how digitalization, decarbonization of industries can actually help here and attract funding from the financial sector into that type of investment. I think those things can be a positive tipping point, if we use that term here.
Well, thank you very much, Carl, and thank you very much, James, for joining us here and for the work you do to push this financial system to become much more climate friendly and sustainable. So best of luck with your continued work.
Thank you. Thanks.
And for all viewers, if this conversation made you curious, check out the Greening Cash Action Guide. That's what Andrea showed in the camera before. It's on the website of the Exponential Roadmap Initiative. So now, after a short break, we'll talk about accelerating the transition away from fossil fuels, a future beyond fossil fuels in Africa. So tune in for that.